Hi, Ken Ajoku here, and in this video, we're going to be talking about how you can get a property with little or no deposit. My name is Ken Ajoku. In case you don't know, I've been a property investor for the last 27 years, and I tend to put together videos and articles to help people actually either get on the property ladder or progress and get build property portfolios, etc. So without further ado, what I'll do is I'm going to share my screen and then we can go through the video, the training. So just bear with me a second. Let me screen share here and we can get started. So we're talking about achieving home ownership with a UK, in the UK with little or no deposit. And now I'm going to be going through creative strategies. Most of these strategies I've done myself or I've taught my students how to do. So let's go through those so that you can perhaps use some of those strategies or at least think about how to use some of those strategies. So we've got the dream of home ownership in the UK without a deposit, and we're going to be exploring creative strategies for financial accessibility. So we're going to be looking at owning a property in the UK. Perhaps at the moment, you know that if you're going to be buying a buy-to-let property, you're looking at 25% that you have to put down. In some cases, some bigger properties, commercial properties, you might be even putting down 30%. So it's quite a substantial amount of deposit to be put down for buy-to-let purpose. For the purpose of buying to live, then you're looking at between 5 and 10% deposit, which sometimes for people is still very difficult to achieve. So we're going to be looking at different ways that we're going to be able to get around those stumbling blocks in a legitimate way. And we're going to look at legitimate ways to turn home ownership aspirations into reality, as I've already said. So the first one we're looking at is shared ownership. And this is a government-backed solution. It's a government-backed solution scheme for first-time buyers and for lower income individuals. It's not actually for everybody, so you just got to be very aware of this. I remember we done a project for a client and they gave us a very thick file. It couldn't even be sent by I said, oh, just email the file over and I'll have a look. She said, no, I'm sorry. We have to send this in a package because it was so heavy, the documentation for the purchase of a shared ownership, and she wanted us to sell that property for her. So we had to go through the paperwork. I think we could be looking at like 400 or 500 pages. It was a lot of information. So you really need to read the small print when it comes to shared ownership. Be fully aware of what you're getting yourself into. Now, shared ownership normally goes between 25% and 75%, and then you will pay the rest on a rent basis. So you just got to bear in mind what exit strategy you want. What are you going to be doing in the next 3 years, 5 years, 10 years, 20 years? What is your plan of what to do with that property? So you really got to have in mind what you want to do. And then what you could do as well as a strategy is you could gradually increase the ownership by paying more. So in a case, for example, I had one of the properties I had, and then we overpaid. We paid a lump sum of money towards that property. In this case, you can say that you want a larger share of the ownership. So you might start at 25%, 35%, and they say, right, I want 50% or 55%. You arrange that with the shared ownership company, and then they will be able to allow you to increase that. So just make sure that you have the ability to do that in the very first instant. Read the small print because there's always terms and conditions that imply that you have to be aware of what's happening. So please read the small print when it comes to shared ownership and government-backed solutions. All right, let's look at a rent to buy scheme, renting. So you can do what's called a option. You can do an option to buy a property. An option is basically an option and not an obligation to purchase a property. So, for example, you might say that you want to buy a particular property for a certain amount of money in 5 years' time. This is handy if, for example, right now you don't have all your ducks lined up. So you may, for example, not have your credentials ready for your purchasing. You may not have 3 months of bank statements, for example, or you may not have, if you're buying it as a business, you may not have your SA 302s, which is your tax returns and all of those things lined up. So doing an option to buy on a buy to, it's like a pay now, buy now and pay later option. Is like you secure the property at a certain price now, and then you pay for it in 3 years or 5 years time. So it really does depend. All of these things depend on what your strategy is and what you plan to do moving forward. That will determine how you will, what strategy you will choose. So what happens here is a portion of the monthly rate will contribute to the purchase price. So you might say, oh, £500 a month will go towards the purchase price. So you agree a purchase price of the property, and then you will deduct that amount that you're paying every month from the total purchase price. This kind of thing could be handy, as I said, if you have a situation where you're not quite ready with the deposit, or you're not quite ready to purchase the property because you haven't got all your criteria and all your things lined up. So this will really help you to prepare to get ready. And as I said, every strategy you have to really, know exactly what your exit is. Exit is important. Know what you're going to do at the end of 3 years, 5 years, 10 years, 20 years, and then you'll have an idea of how you're going to move forward and getting on to this type of thing. So you might be, for example, you might be thinking or considering building a portfolio, for example. So building a portfolio, that's the most difficult and challenging thing to do is to get the first property. So once you've got the first property under your belt, when you go to the lender, you can say to the lender, you've already got a property. They will now consider you as a professional landlord. When you're considered as a professional landlord, it's easier to get buy-to-let properties, for example, and other properties moving on. So depending on your strategy will depend on which one you choose and how you move forward with that. And what you've got to do is secure the property with substantial, sorry, you don't have to secure the property with substantial upfront costs. Depending on how it's structured with the lease option, sometimes you have to put down a very small deposit, or it might be just that you have to pay 1 month payment in advance, or it depends on the arrangement that you have. Sometimes you have an initial fee that you have to pay, but it'll be a lot less than having to pay a 5 or 10% deposit or 25% deposit if you're doing a buy to let. Okay. So this one is seller finance, direct negotiation. So you can directly negotiate. So in some cases where you're dealing with, for example, developers, if a developer has developed a property and they are dealing with you directly with the financing, you could arrange something with them. Developers tend to give incentives. They'll give you an incentive to purchase their property, but just bear in mind if you're going down this route that the properties tend to be more expensive because they're brand new. So brand new property will be more expensive than a pre-used or stock that's already on the market. So just remember that as well. As I've always said, read all the small print. It takes you 2 weeks to read the small print. It's worth reading that small print because there might be a lot of terms and conditions that you're not familiar with. And then you end up signing up for something that you didn't know that that's what you're signing up for. So be very careful about that. And in most cases, they may not need a down payment depending on how they structure that deal. So you'll be able to negotiate directly, as I said, with the seller. It could be a seller or it could be a developer in this case. Someone has actually developed that property, the flat, the commercial property, or the house. They've actually developed it themselves, and you're dealing directly with those people. So what you got to remember is got to be a win-win situation for both parties, and this will eliminate the need for a mortgage lender. So once you've negotiated, you're happy with the terms, and they are happy with the terms. You've come up with a happy medium. Then this will be beneficial for you to move forward with that particular deal. All right. Guarantor adding security to C home. So this is like a surrogate donator. You can have somebody that is going to be your guarantor. It could be a relative, it could be a business associate, it could be something like that. That person has that money to pay that deposit if you default. So you can use that as a security measure, and you say, look, I've got somebody. If I can't make the monthly payments, then then the deposit can be taken from this person. So obviously you have to have a very good negotiation with that guarantor to make sure that they're happy to be that guarantor, because there will be terms and conditions that will come into play. Usually people have friends or family members that will help them. Maybe you can get somebody else on board that wants to get into property anyway. So this might be an opportunity for you to joint venture or JV partnership. You can get together with them, and maybe you can structure something that will benefit them as well. So it might be that you structure something that gives them some kind of return on their investment if they made an investment, or there's some kind of incentive for them to do that. Otherwise, why should they do that? The guarantor covers repayments in the case of default. So as I said just a moment ago, if you default on any payments, then that guarantor will be liable to pay those fees. So I would suggest something like this might be for a rental property, for example, if you can work out something with the guarantor and maybe give them a cut of the action, give them a piece of the action. It might be, a certain percentage of the rent if you're renting it out, and then both of you could be in a win-win situation, and that will benefit both you and that guarantor. So there's also an extra layer of protection or an extra layer of security here with on the mortgage with little or no deposit. So as I said, you might not even need a deposit to negotiate it properly. You may not need a deposit at all because the seller or the developer may be happy with that arrangement, knowing that there's a guarantor on the other side. So just bear in mind those aspects. Okay, so overcoming financial hurdles. So in summary, we have shared ownership where we talked about the rent to buy strategy, the lease options, seller financing, and the guarantor or mortgages. So once you have those in place, then you can decide which one will be most suitable for you, but weigh up all of the options. Look at the advantages, look at the disadvantages of going down that road. Look at your exit strategy is very, very important. What you're going to do in 3 years, 5 years, 10 years, 20 years, or the life of that mortgage or the life of the term of that contract. What is your plan? Is your plan to increase your portfolio? Is your plan just to live in that property and increase in value, wait for the equity to build up, pull that equity out, use it for your pension? Or is your plan to take money out of that property and use that money to refinance and buy other properties so you can use that to put down deposits in other properties and build your portfolio? So you really have to have some kind of plan in place so that you know where you're going 3 years, 5 years, 10 years, and 20 years from now. That is really, really key. Research and consultation with professionals is crucial and it's essential. You can reach out to us, we can help. We'll put some information in the links in the description below. So if you want to reach out to us, by all means, you can. You can reach out to us and we can have a 15 or 20-minute discussion with you to see how you can move forward with that. The other thing as well is we want to emphasize the achievability nature of home ownership without the initial deposit. So remember, these are strategies that you can deploy that will either reduce your deposit or actually, if you're creative enough, you won't have to put any deposit down at all. We have on a number of occasions put together strategies for our students, and they've actually got a property with very little. I think not too long ago, we had someone that had a property for £3,000. So that's all that they paid down was £3,000, and they had a property out of a 3-bedroom house. So there's different strategies that you can deploy depending on how you want to get involved in your property business or property, whether you want to get on the ladder just to get on there yourself to get your first property. But it's really key and it's important. It's essential to get it right the first time as you go through. So thorough research is the key to success. Real estate transactions are complex. Thorough research is essential, really, really essential. Consultation with experts and understanding legal aspects is crucial. As I mentioned to you earlier on, there was a very thick document that I had to read before helping a client sell a particular shared ownership property. So you will need to do some work. It's not a walk in the park. It's very easy. You will have to commit some time to learning and discovery. If you haven't got the time for learning and discovery, then get some training. You need to get some training behind you so that you know how to do these things properly. As I said, you can reach out to us. We can help you if that's something that you are interested in doing. And proper preparation. It ensures a successful and secure property purchase. So plan, and execute. Don't hang around and say, "Oh, I'll do it next year. I'll do it, the year after." Start your planning now. Get involved now. Get started now. Don't worry. Oh, is it a good time to buy? Is it not a good time to buy? I think we've got a video somewhere else about that. particular subjects as well. So if you want to check that out, whether it's a good time to buy or not. My personal summary about that is always a good time to buy as long as you buy the right thing at the right price in the right place. So you just need to know how to structure those things. So that is it. Buying a property with no deposit requires effort and negotiation. It leads to home ownership and provides a solid foundation for your financial future. And remember to seek advice from experts for secure and successful purchase. I hope that helps. And what we do is we're going to, if you have any questions, we're going to put a link in the description to our academy where there's a question box where you can type it in and the AI will help you with answers there. And also, we will share a link to an article which describes exactly what I've just gone through on this video. So if there's anything that you feel that you've missed, then all that information will be in that article and the link will be in the description below as well. So remember to like, share, and subscribe for other videos similar to this. We'll do our very best to get as many videos as we can up on YouTube and on different platforms for you to enjoy and to help you to get started on your property journey. So all the best. God bless you. Take care. Thank you very much. I hope this has helped. Take care. Bye-bye.